Yep, good evening, everybody. You are most welcome to this great meeting. It's a great training. We keep on learning every day. We have done so much so far, and we still got a long way to go because Forex training or Forex education is not a one-time off. Even the gurus of today, they keep on learning and learning and learning. So we feel at the right place. Good evening. Prepare to learn, prepare to get substance from the best of the best cream that are cream. Our guest tonight is going to teach us about support and resistance, how to draw that, how to use that to make profit. So just get a pen and a paper, open your MT4, open your wherever you write, because you will learn a lot today. So I want to share with the best cream that are cream. Our guest tonight is going to teach us about support and resistance, how to draw that, how to use that to make profit. So just get a pen and a paper, open your MT4, open your wherever you write, because you will learn a lot today. I want to share with now, without much ado, let me invite our guest speaker to share with us what she got, and I believe we shall be blessed. Here she is.
So today you're going to learn everything you need to know about support resistance, how to draw it, what are the different types of support resistance, and also what are the factors that help you increase the strength. Let's get started right now. Put it simply, what is support resistance? Basically, it is an area where money changes hands. Buyers, they will change their opinion. Okay, maybe I should sell right now instead of buy. So of course, you have two types. What is the difference between support resistance? The psychology behind support is that, let's say you have a level over here, price initially comes down, bounce back up. Okay, so at this point in time, buyers are in control. And then the price comes back down to the same level again, to this level. The people who bought initially be like, oh my god, another opportunity for me to add more positions. They are going to buy more over here. Those who did not even trade here to begin with, they missed out on the trade. Initially, when they saw this, they'd be like, oh my god, I should have bought earlier at this price. I will wait for the price to come down to this level and then I will get in. So when price comes back down, the people who miss the opportunity, they are going to buy here. Then you have the sellers. Let's say for some reason they decided to sell somewhere right here or somewhere right here at the top. Alright? So when the price comes back down, at this level they saw that okay, price bounced off from here. Price might not continue to go down, hence I will take profits. So they'll buy back their shares, or in currency trading you take profits over here. So this leads to a lot of buy orders over here, and hence this is why the price will bounce back up from there, and then so on and so forth. So basically, support is an area where demand exceeds supply. For resistance, it's the other way around. But the psychology is basically the same thing. At resistance areas, supply exceeds demand. And as you know, when supply increases, price is going to go down. So when the price initially comes up from here and then it goes down, alright, goes back up to this resistance, the sellers who sold over here, they be like, I should have bought more because just now the price went down. I should have added more positions. Let me wait until the price goes back up to this level and I'll add more positions. So they're going to sell here. Same thing for people who miss out. They saw this, they be like, I should have sold. Let me wait for price to come back to. It's the same thing. Buyers, maybe they bought over here. Price comes back up and then they saw this resistance level where price bounce off here. They are going to take profits. And hence with these three groups of people, it's going to push the price down. And this is how a resistance level is formed. So functions of support resistance, you can use it to, of course, enter a trade, and you can enter based on breakout, or you can enter on a retracement of the price. So some people call it the retracement entry. So the breakout, how does it work? Let's say you have a resistance over here. Price tested resistance couple of times. Okay, and it breaks above the resistance. This will cause buyers to come in because they anticipate the price to continue to go up. How about for support? It's the other way around. For support, when the price comes down here, tests a couple of times, 3 times, breaks the support, this will attract sellers to trade the breakout. And of course, be very careful because this type of trading, you'll be subjected to false breakout risk. Because a lot of times, when a false breakout occurs, the candlestick will break above the resistance but then come back down. I've never been so betrayed in my life. So I would say breakout trading is a little bit more risky and the risk to reward ratio is not that ideal. So another way that you can trade, which I personally prefer, is retracement entry. So for example, if you are looking at a support zone, price comes down, tests a couple of times, and on the third time, you don't just enter straight away. Okay, you're gonna wait for confirmation. Support resistance, you cannot use it alone. You gotta use it with confirmation. So for example, if you are pro in candlesticks, you see for example, a bullish Harami pattern being formed at a very strong support with confluence. Later I'll talk about confluence. Then this is a good time to enter and you can put your take profit at the most recent swing high. And your stop loss could be just below the support, and this gives you a good risk to reward ratio. Normally what traders will do is they're going to enter somewhere here, maybe slightly higher than the bullish Harami, and then aim for risk to reward ratio of 1:1.5 minimum or 1:2. So another way that you can enter on a retracement is you combine these two together. So how do you do that? Let's say you have a resistance. Let's say price bounce off, bounce, break this resistance, and then normally after a breakout, sometimes you'll see that the price will U-turn and come back down. U-turn, come back down and test this resistance, which became support over here. So you can enter on a retracement after the breakout and then enter here, wait for candlestick confirmation and confluence, and then this is a better entry for you because again, you can get a better risk to reward ratio as compared to if you are to enter here. The downside of this strategy is that sometimes the price might not retrace. It's going to go straight up and then you'll be like, oh shoot, you got to trade based on your personal trading style. Personally, I like retracement more than breakout. You need to understand that support can become resistance. Resistance can become support. And also, it can go on and on. Resistance can become support, support can revert back to becoming a resistance. And also, another thing you need to understand is you gotta use it with your price action strategy and also your confirmation indicators. Later I'll give you some examples. Another thing is that you can use it in not only currency market, but stock market, commodities market, futures market. So whatever that I'm teaching today applies to the other markets that you're trading aside from forex markets. And also you can use it in all time frames. But there are certain time frames that are better. Before we move into that, also remember that it helps you to find exit levels, where to take profit, where to put your stop loss. So support resistance is like a wall, okay? It's like a floor and a ceiling. If you're in construction, civil engineering, you know that certain walls that you build are not that strong, certain walls that you build are stronger depending on the material you use. As long as your wall is as strong as Trump's wall, how do you find strong walls, floors and ceilings? Depends on a couple of factors. The first factor depends on the number of tests. A lot of people will say the more it tests support resistance, the stronger it is, only to a certain extent. Because you know why? When the price first tests a support, on the third touch, this support will still be considered strong. Understand what I'm saying? But at one point in time, when it tests too many times, the support will become weaker and weaker because trends don't go on forever. They run out of momentum. Same thing with ranges. They don't go on forever. They run out of momentum and eventually has to break out. So when you see a support that is tested way too many times, you already know that, okay, any point in time right now, it might break. So to be safe, you enter on the third touch or bare minimum fourth touch. Number two, you need to ask this question: how recent is this support and resistance? If it is formed just recently, it will be stronger because this is what traders are looking at. If you have a support resistance that was formed, let's say 20 years ago, do you think that traders are going to look at it that much? Do you think they are going to scroll 10 years back, 20 years back and use that as a support resistance? Not really. And even though you can use support resistance on all time frames, just like chart patterns, just like candlestick patterns, just like any other indicator, it works better in small time frames or higher time frames. By now you should know, if you pay attention in the previous video, higher time frames. For example, H4 time frame, daily time frame, weekly, monthly. These are the higher time frames. Bare minimum, hourly time frames. If you go down to the minute, 1 minute, 5 minute, 15 minute is a little bit too noisy. And the second thing is that the smaller time frames, support resistance is not that significant in the big picture. Because let's say, for example, if you look at 1 minute time frame and then the price goes like this, tests a support again and again, it looks strong in the minute time frame. It looks strong in the minute, can you see it? It looks strong in the minute time frame. But then if you zoom out to the hourly time frame, what will this look like? You need to use a microscope. Let's say you zoom out to the higher time frame, 4 hourly time frame. What will that look like? Let's say you have a major trend over here, and then you have a little bit of range over here. That support resistance will probably look something like this. And if you're a stock trader, you look at volume. If the support and resistance is formed with high volume, then it will be stronger. But if you're a currency trader, don't really need to look at volume as much. There are some traders who look at it, but then personally I feel that it is not that necessary. So there are many types of support resistance. The first one is moving average. I'm going to talk into detail about all this later on. Okay, just understand this for now. You have your horizontal support resistance. A lot of people draw it the wrong way, so later on I'll teach you how. Third type, these are the more invisible ones, round number support resistance. It's not that obvious. That's why you need your glasses. Fourth type, you have Fibonacci. Fifth way you can determine support resistance, also not as obvious, but it's there. Market gaps can also form invisible support resistance. Then the next one, what I call interest rate support resistance. Do you know that when Fed cuts rate, US dollar moves down, it can form a resistance right on top? If you want me to make a video on this, let me know. And of course, you have, some people call it slanted support resistance. Whatever you want to call it, okay? Trend lines, your supply and demand zones. Please understand that this is different from this one. A lot of people think that this is a supply and demand zone. Yes, price bounce off because of more demand from the support area, of more supply from the resistance area, but it is different from supply and demand zones. Okay? Okay, let's go through all those things one by one. It's going to be, we're going to talk until midnight. The thing about support resistance is it is very subjective. Like, how should you draw it? Because it's more like an art than a science. There are many ways that you can draw it, right? Do I draw it like this based on the two lowest points? How about resistance? Do I draw it like this based on the highest point? Like that? Is this the right way to draw it? The thing about support resistance is that you need to draw the best fit line. In fact, it's not even a line. It is supposed to be a zone. So if I'm to draw a line just to make things simple, draw the point in which it touches the most amount of candles. So the first line, you can see that it only touches 2 candles, but the second line over here, it touches 1, 2, 3, 4. This is what we call the best fit line. Same thing for the one on the top. You want to draw the line that touches the most amount of candles. Let's say if I draw it like this. Okay, so it touches 1, 2, 3, 4. So you can see the zone over here already. This becomes the support zone. Then this becomes your resistance zone. So one tool you can use to draw your zones is the rectangle tool that you can find in your MT4. Okay? And why is it so important to learn support resistance? Because a lot of times you use it in a ranging market. Or some people call it price congestion or consolidation market. This means that the price just moves sideways, it's not trending. It bounces off support resistance again and again. And also very important to understand that markets generally range about 70% of the time, and then only trends 30% of the time. So if you're range trading, you gotta trade currencies which range a lot of times. You need to pick a currency pair in which the interest rate differential is very small, because if the interest rate differential is very big, then the currency is going to trend more than it ranges. So if you found a currency pair that always produces a good range, when it does break out, how long will the breakout last? First thing first, it depends on the time frame. If you apply this in, let's say, 1 minute time frame, 5 minute time frame, it's going to last for a few minutes. It's going to last for days if you use it in a daily time frame, even for weeks sometimes. And how do you know how far it will go? A general guideline is you measure the height of this range, project this upwards, this will be your target price. Okay? So another type of support resistance is moving average. It is considered a dynamic support resistance. Okay? Because let's say if you have a 50 SMA, a lot of times you realize that it will often cause the price to bounce off from it. If you are using a larger moving average like 200 SMA, the price is not going to come down and test 200 SMA as much as 50 SMA, because the smaller the value, the more often the price is going to test the moving average. So of course, moving average, you can use it as a trend indicator. When you're looking for a buy trade, you want the price to be above moving average. You want the moving average to be sloping upwards, and the smaller SMA being above the larger SMA. So one of the ways that you can trade an uptrend is just follow the trend. You buy and then you hold the trend long term. Another way, if you're a shorter term trader, you can buy on retracements. During an uptrend, you will see minor retracement downwards. Then you can potentially buy at these points. The good thing about this is that it gives you a good risk to reward ratio most of the time, especially if you add moving average with another type of support resistance, which is trend line. So if you draw a trend line and then there's a confluence, okay, a confluence, this means a double layer of wall, double layer of floor, double layer of ceiling. So you have the trend line which acts as a floor, you have a moving average which acts as a floor. Like I said, you need the first 2 points to confirm that the trend line exists. Okay, so you want to wait for the third touch over here, and this would make a good entry point. And if you see a bullish candlestick pattern over here, the better it is. What else can you add? Let's say if you scroll back into the chart, you realize that there is a strong horizontal support. So this gives you a good triple layer confluence. What if you add one more thing? Fibonacci. In real life, you don't want to complicate things too much. You don't want to clutter your chart too much. Let's say you draw it from here to the top. Okay, you draw a Fibonacci, and you realize that price retraces to the 61.8 level. This is another confirmation that the price is going to bounce off from here, because Fibonacci can act as a support resistance. And if this level is very near a round number, let's say if this level is 1.18000, this again increases the probability that the price is going to go up. So you need to seek out different confirmations to increase your probability. Of course, even with all these things, it is still possible for price to come down and hit your stop loss. Now, I'm not going to talk too much about trend lines, about moving average, because I've already done detailed videos on those. Go and find it yourself. Don't tell me to send you the link. If you want me to spoon feed you, go back to your job. Fibonacci, to put it simply, I'm not going to go into too much detail about this. If you want me to make a video on this, let me know. To put things in simple terms, there are many different Fibonacci levels. You have the 0%, 23.6, 38.2, 50%, 61.8%, and then you have 100%. Which one is a stronger support? Do you want the price to retrace until this level, this level, or this level, or this level, or this level? So as you know that bullish trends don't go straight up. It goes up, retraces, goes up, retraces, goes up, retraces. How much is this retracement in terms of the overall swing move? This is what Fibonacci tells you. You want the price to retrace until ideally 61.8%. Then that is a good support. But if it retraces to beyond 61.8, it might signal a reversal in the whole entire trend. This means that the bullish trend might have ended, then it will go on to a bearish trend. So very often you'll see price testing 61.8 and then bouncing back up, testing 50%, bouncing back up. These are the two good levels to go in. The good thing about trading on a retracement is that when the price goes too far away from, let's say, your 50 SMA, the chances of it going down is going to increase. So if you want to buy here, it is very dangerous because you realize that price once in a while it has to come down and test 50 SMA. It cannot leave 50 SMA because it loves it so much. So is it better to buy here or here? Definitely over here. And ideally when it retraces, you want it to retrace to 61.8% or 50%. Of course, the next one. Now market gap, I've already made a detailed video regarding this. There are many different types, but to put things into simple terms, market gapping is very common in the stock market, so you need to be careful. So when the market closes and there's a high impact news in between, when the market opens back, it's going to produce a gap. Okay, so very oftentimes you realize that the bottom of the gap is going to serve as a support level. So very oftentimes you see that price might come down and then bounce off from here. Okay, it's not as strong as compared to the obvious support resistance like the horizontal S&R and also trend lines, but you still need to take note of it. So if the market gaps up, it's going to form a support, but if the market gaps downwards, produce a gap over here, it's going to form a potential resistance. Okay, so you'll see that price will often come back up and fill the gap. Sometimes it wouldn't fill. Most of the time it's going to come up and fill the gap. This might be a potential trade tool and bounce off from resistance. This is what a lot of people don't teach you. Most retail traders don't even look at fundamental stuff. They don't even care about economic indicators, don't even care about fundamental analysis, what more interest rates. Do you know that interest rate announcement can produce support resistance areas? Let's say if Fed decide to cut interest rate today, then dollar is going to plunge. Okay? What you might see is that from the moment when Fed decide to cut interest rates, an invisible resistance is going to be formed. And then price is going to come up and test this level again and again. Of course, again, because it is not that obvious, so it is not that strong, but it still exists. Same thing with when Fed increases interest rates or any central bank which increases interest rates. The moment when Fed increases interest rates, this point in time is going to produce an invisible support. Then the price is going to come down and test this invisible support, and then people will be like, why did it bounce off from here? One more thing, supply and demand zones. It can also cause price to U-turn and bounce off from there. Let's say you have a demand zone over here, okay, where there are tons of buy orders, and eventually you realize that price is going to come down to this level, and for no reason at all. You cannot see any support in the previous days, in the previous hours. You realize that because of this demand zone, price is going to bounce off from here. Time and time again, you'll see this happening. Same thing for supply zones. Very often times, you realize that price will eventually come back up, fill the remaining orders that is created by this supply zone, and eventually the price is going to come down. You cannot find any resistance in the previous trading sessions, and a lot of people wonder why. How come it retraces from here when there's no resistance line at all? Because you need to understand that in the forex market, in any market, there are obvious support resistance, which a lot of retail traders learn. There are also invisible support resistance, which a lot of retail traders, they don't even bother. One very powerful thing, if you learn to combine all of these things together is going to be super powerful. Add that with candlestick confirmation. Why do you still need to clutter your chart with so many random indicators? With any support resistance, it can be broken. With any indicators, it doesn't work all the time. So when will S&R not work out? When will it be broken? Of course, the obvious one is when there's a high impact news or event. The price can just pierce through support instantly, 100 pips, 50 pips. Or if you're trading stocks, when there's a company earnings announcement, especially when the data that is announced, it is completely unexpected. You expect that Tesla is going to lose money this year, but Elon Musk is like, I'm about to bring you to school. And also, like I said just now, when it tested the support resistance too many times, like it bounced off again and again and again, then the wall becomes weaker and weaker and weaker. Because if you hit the wall every single day, eventually it's going to break. Agree with me? And also, if there are major capital flow, let's say from stock market into, example, Swiss franc, because there's a new virus coming out. Okay, major capital flows from safe haven to stock market because stupid virus is gone. Or if the major markets, let's say S&P 500, Dow Jones, it spikes downwards or it spikes upwards, it's going to cause individual stocks to move along with it. Go and look at March 2020 when S&P 500 tanked, the other stocks also tanked. The commodity currencies also went down. And when I told people to look at all this and consider buying, how many people bought? How many people listened? My guess is not a lot of people. And most important thing, you can have the best support resistance strategy in the world, but nothing is going to change if you lack this thing, which is most important. How many traders just go in like that? When the price breaks out a little bit, they just cannot wait. How many traders, before the price even retraces to the support, they be like, okay, let me just get in right now. The key thing is have the patience to practice. When you have no trades, don't be like itchy finger, go and trade. When you have no trades, practice drawing proper support resistance zones. You don't have to trade all the time. Do you know that not trading is also considered doing something? So stop freaking scalping the markets when you have no experience, when you don't know what you're doing, just because it's exciting. If you want excitement, come to Singapore. There's a theme park just right beside here. If you don't know anything about...
So that was our lesson tonight, and we will continue learning from there. May I take this opportunity to wish you all the best as you take that as a homework to study more on support and resistance. Tomorrow we will be able to answer some of the questions you might be having. I know maybe you have some questions you want to ask, and those are the questions we shall be tackling as from tomorrow. God bless you. It's a good night from us. May you enjoy